All right, y'all, back to work. Great job today. Another beautiful range rotation. It sounds like a lot of you guys are getting pretty good at these range plays, so well done on that. Now, are you seeing this market right now? It's slowly grinding higher, get the all-time highs just overhead. Now, in my experience, almost 20 years doing this, when markets are slowly grinding towards these all-time highs, usually that means there's two types of trades that work best the following day. I want to cover both of my favorite trades for tomorrow because, as always, I want to make sure you all have a game plan, a roadmap to make some money tomorrow as well. So we got some big news tomorrow morning. All-time highs just overhead. Enough of the intro though, right? Charts are ready. Let's wrap it up. Let's make some more money and what's been a fantastic week here so far. S&P SPY ready to go tonight. NASDAQ triple Qs are ready. I've got 5 clues on these charts tonight that are telling me where I think the money is made tomorrow. 2 out of those 5 clues are right here on the hourly chart. The first clue, it's the overall direction. Remember, we like to use this hourly chart as my directional filter. One big clue for tomorrow is, it's obvious, right? The buyers are in full control right now of momentum. That is my focus for tomorrow. The second clue, though, is also pretty obvious here right now. We had that strong run up in non-farm payrolls. Anytime we see a big move, a pullback and a retest of the high, we're right at that all-time high right now on the S&P. Big move up on the NASDAQ, pull back and a retest of that high. There's those all-time highs there on the NASDAQ. Remember, context is very important. We are definitely bullish right now, but we are way high up right now. I'll bet the smart buyers are trying to buy a bit lower tomorrow morning. To be careful chasing this thing going higher. So 2 clues here on the hourly time frame. We're bullish, we're very, very high up. Third clue is over on the calendar for tomorrow. We got PPI number coming tomorrow. Now, don't you forget, a month ago, that PPI number was at a 3.5-year high. It began to look like the tariffs were being passed to the producers, but we definitely know tomorrow, though, 8:30 Eastern time, keep that on your radar. Will we see a pullback off those 3.5-year highs that we saw last month? I think all of us are hoping for the best tomorrow, but we definitely expect to get some volatility 8:30 in the pre-market tomorrow, so be aware of that. Let's get back to our charts, though, because we have 2 more clues on the faster time frames. Remember, we don't trade off time charts. We always trade off tick charts. Tick charts make entry timing a whole lot easier. If you want an easier job to time entries, tick charts are where it's at. That is a 7,000 tick chart in the upper left-hand corner. And as always, the only indicator we use to make money each day is the 21 EMA. You don't need all those complicated indicators. I promised 2 more important clues here right now. One clue is right here. Like I said in the introduction today, what a beautiful range rotation. If you guys have been watching my videos, you know we went up, pulled back into a range, use the amount above the range, protect below the range, right? Beautiful spot there for that bear trap. We got 1, we got 2, and riding that sucker back higher again. Got a lot of emails, a lot of comments on the YouTube channel today. People making bank off those range rotations. Now, what do we see right now, right? The amount that we went below the range, the amount we go above the range, we now have a pretty convincing breakthrough, what we call a pendulum swing. Now, why is it important? Well, because whenever we see a rotation off the low and a strong punch like that, now we know that this range can now be used for a breakout pullback. That is our 4th clue overall. Strong rotation off of the low, a convincing break going higher, keeping an eye out for that breakout pullback zone. The final clue, though, which might be the most important clue as far as timing entries goes right now, was just how slow this thing, I mean, it took a long time, right? We took some profit targets this morning around the underbelly of that range, and it really didn't rotate here until this afternoon. A slow grinding move going higher here. I mentioned earlier that anytime we see a grinding market like this, grinding markets are very specific. In fact, there are 2 types of trades we look for whenever we see a slow grinder like that. Let's cover the basic one first here on the S&P, and then later on in this video, we're going to kick this up a few more notches and talk about what is a bit more advanced strategy, but in all reality, it can pay a lot better. We'll cover that a bit later here on the NASDAQ. The first one is anytime we see a market grinding higher, and of course, there's that all-time high, we don't want to buy high right now into the all-time high. When I think about the scenario, grinding higher, all-time highs, I begin to think about prior swing, prior swing, prior swing. Whenever we have a market grind like this, we know that most of the time the best entries are down below a prior swing. But how do we time the entry on that? Well, just as we saw today, we run lower, trap some bears in, squeeze those stops, and run it higher. So one of my two strategies for tomorrow is get below prior swings, and really, I don't care which one it is. It could be that one, that one, that one. I don't care. But get below a prior swing, and you know me, right? I'm not going to pick a bottom on this. I'm not going to blindly buy this thing because it may keep going lower. I don't know. What I do know, though, is in a grinding market like that, in a range breakout market like that, much better to let some rookies try to short this a couple times, use what I call a two-try bear trap, and squeeze their stops and go back up to retest the high. Now pay attention here though, because if we can get that bear trap trigger and we start seeing it make a run go higher, it wants to go back and take out that recent high. This is where we look to add to our winners. Guys, if you want to make more money, add to your winning trades. And we know that the add-on trade for this is separation off the moving average. Like back over here, right? Look how it separates, right? It separates. The pullbacks are very shallow. Look what happens when they separate. They get in below those prior swings, right? So that is our add-on going higher. So again, one way I'm going to trade this grinding market for tomorrow is a bear trap into an add-on and back up to retest the high. Now here's a question for you though. What if we don't get that bear trap? Well, right at all-time highs, we may end up getting a nice big right smack back down again, get underneath some of these swings here, but we may not get a bear trap down there. It may just whoop and run right back up again. If it V-bottoms off that pullback and it pops up and starts grinding going higher, all we do is go find a new channel and buy the first test like this, off the high, off the low, and remember, look left, find some prior swings, and really guys, I can use any of the entry patterns that I teach in the free video course to buy the first test off the low of that channel. Oftentimes it's a technical trap like I'm showing you here. Sometimes we get below that 21 EMA. It's a two-try bear trap, bears once, bears twice. A lot of examples of that inside the free video course, but I want to basically buy the first test off the low of that channel. We call this a V-bottom entry. Not ideal, but I don't control the markets. I'll take whatever the market gives us, and the goal is to go back up and retest that high. Now, one more question. We have a PPI report tomorrow morning. This is a range, right? Would anybody be surprised at the all-time high up there? It makes this rip running all the way down. Remember, it could rotate all the way back down again. It's not likely, it's not probable, but it's definitely possible. If we saw a big run down, I just want to warn you about this because we may get what I call a retest trade. We may get a bear trap down here, bears once, bears twice, and pop that sucker up. But oftentimes though, when I see a strong move like that, oftentimes I'll get that 1-to-1 first target, get rid of that risk. It's a winning trade. But every once in a while though, we get another leg going lower. We call these retest trades. So again, imagine news comes out, really big move going lower. We get a bear trap down there. It's a winning trade on this, but it doesn't go all back to the highs. Bears come in, they short this thing back to retest that low. Now, this will feel very bearish, but it's a retest trade. It's a retest trade. Retest trades are very good. Run down, retest the low, bears try twice, and back up again. If we get a strong run down, bear trap in, and it retests that low again, remember, anybody who sells here, they're taking their they're buying their way out right there. So do it again. Do it again. Retest trades are not reversals. Remember, do not let the tick chart confuse you on direction. The hourly time frame is our direction. It's a two-try bear trap. it's a run higher. Look for that separation off of that moving average, right? The higher high in price, separate off that moving average, and we'll add to our winner. Target, of course, now is back up to retest the high. Love those retest trades. Do not let that confuse you for tomorrow if we get some big reactions off that PPI report. Now, I promised you a second strategy on the NASDAQ. Before we talk about that, strategy number 2 here, let's slow down for 2 seconds because I know most folks watching right now, you guys know these patterns. You're making bank on these. I love hearing you guys talk about making money with this stuff here. But if you're watching for the first time right now, this might be a brand new strategy. Don't you worry though, I teach this entire roadmap. In fact, I have a ton of examples of all of the entry tactics I'm talking about. I cover all of this in my free video course. What I'll do is, guys, I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there. Take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick we use. You will laugh and it's how simple it is. A simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. Remarkably simple technique. More importantly, let's face it, we make our money by timing good entries. So in that video course, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back, get your P&L back in the green again. Guys, bottom line, if you're still missing the best entries right now, if you've lost your confidence in your indicators or your current strategy, what are you waiting for right now? Pause the video, hit that link that popped up there, watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is it's completely free for you. Be aware too, guys, I'm going to put all the important links you'll need tonight in the video, the description of this YouTube video down below. I'll put the free classes links down there. Start first on the free video classes. Most folks start making money all on their own, all from that free video course. So start there first. And don't forget too, we trade together every morning at 8 o'clock Eastern time. I'll put trade room membership links down there for you. You'll love trade with us every morning in the morning room. And don't forget too, I post a ton of charts and videos and mindset stuff on Twitter, or X as the kids call it these days. If you're on the X platform, give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more, and come join us every morning in the trade room. Our link below the video tonight in the description of this YouTube video. All right, so where did we leave off? Yes, we're talking about grinding markets, getting in underneath prior swings. I gave us some bear traps. I gave us some variations of that for tomorrow. That's the roadmap for strategy number 1. Let's talk strategy number 2 here now over on the NASDAQ. Remember, first things first here, the hourly time frame is direction, right? It's direction. We don't want to get too far into the weeds on this. And again, there are 2 important clues here on the hourly chart. First one is we know we're bullish. There's no doubt about, we're not a bear market right now. There's no doubt about that. The second one though is again, strong run up. Pull back, retest of that high. Remember, as we say in our trade room, context is really important. There's a very big difference between a bull market and a deep pullback and a bull market and a retest area, right? These are 2, they're both a bull market, but obviously where we are right now is not the same context as where we were, last Friday morning or last Friday afternoon into the brand new week here this week. When I see stuff like this, I remind myself, okay, I'm trying to be a buyer here, but at the same time, I really got to be careful not to chase after things, and don't be surprised if we see a nice big shot, right, going lower here as people take profit and as bears come in and try to short this thing off the high here. Now, that's two important clues here. Before we talk tick charts though and time the entries though, if you're enjoying tonight's video, please help me grow this channel, will ya? Hit that like button for me. Make sure you subscribe. I always appreciate you guys tuning in every evening, guys. Thank you so much. All the likes, the subs, all the ongoing support, all the love I get in the comment section below. It means a lot to me. Thank you guys so much for tuning in and watching here tonight. Over our tick charts though, 4,000 tick chart. 4,000 tick chart, a little bit lower time frame on the NASDAQ. Why? Because the NASDAQ is less volume, right? It's illiquid compared to the S&P. What are you seeing right now on the NASDAQ? Well, there's that range, right? There's that range. Now, be aware, you'll notice here, the range is a little bit different than it was yesterday, right? Remember that range yesterday, right? The amount above, the amount below. So I said earlier, you guys are getting good at these range rotations. A little bit different range than yesterday. In my trade room, we always make every day kind of stand on its own, right? So we have a new range here, new range right there. And again, what do ranges do? Ranges love to rotate. We run down. We're rotating now off of that low, the amount below, the amount above. Again, these pendulum swings, I've got a lot of emails from you guys really doing well with these pendulum swing techniques. So we know now the buyers, they're trying to work their way up to that, what's that, 946 or so. Okay, we know that is over resistance. That is the target now, the objective, as we might say, for these buyers. But look at the big clue right now. Look at that slow grind going higher. Now, we talked about this last night a little bit, right? Grinding markets are tough to stop, right? That's why I'm not trying to short this thing right now. If you're wondering, well, if we're so high up right now, right? If we're so high up right now, Joe, why aren't we trying to short this thing? Well, because believe it or not, picking a top in a market like this is a lot more difficult than it seems. A lot of times what happens is we get these big runs up, we try to pick a top, but it just keeps on going. It's not as easy to pick tops as I would like it to be, or else I would be calling about shorts off the high here. But right now, though, again, grinding market, very tough to stop a grinding market. Is it impossible? Of course not impossible. Anything's possible, but the odds are not very good for a short when it grinds like this, because grinding markets, they bring all the moving averages up, right? It's very difficult to short a grinding market because it drags up all the moving averages, right? I use 21 EMA, but a lot of folks do use extra moving averages, and that makes the grinder. Okay, so on the S&P, we talked about how below prior swings, and again, all of these swings are very attractive. I love how that channel lines up nicely there. So we went over some guidelines, some strategies for tomorrow for the bear traps down there, right? I'd love to get a bear trap below prior swings, trap some bears in off the moving average, and use that to try bear trap. You guys will learn in the free video classes. And then again, grab that add-on as it separates off of the moving average. Now, I'm simply drawing the screen right now, but there are a lot of examples of this setup inside that free video course. I think we know where the market wants to go, right? It wants to take out that 46 overhead here. So we talked about that. We also mentioned too, don't forget in the NASDAQ too, if we were to rotate all the way back down again, the amount above, the amount below. This doesn't really apply to the S&P because the S&P has already broken through its pendulum swing. But, again, we have PPI report tomorrow morning, right? Get a swing low right there. Nobody should be surprised right now if we saw a really strong shot down, finish off the pendulum swing going lower here. And again, right, get that pull back to the moving average. I'm not going to blindly buy down there. We're not going to blindly buy into it. We're not trying to catch a falling knife here. As it pulls back, bears once, bears twice, trap them in, and squeeze stops back up. And again, don't be surprised if it really makes a strong run down. Do not be surprised if it pops up here. Oftentimes it'll hold the underbelly of these prior swings and then retest that low. Again, retest trade. Do not let that fool you. It will feel very bearish, but again, we're so bullish overall right now on the hourly time frame. Remember this when you're trading tomorrow morning, or come join us in the trade room tomorrow, and I will remind you this relentlessly the whole entire time, is that we don't use tick charts for direction, right? Tick charts are for entries. Okay, the hourly chart is for direction, right? So don't forget those retest trades. Those are some of our favorites. Now, I promised you one more strategy, and bottom line is, oftentimes, if we are grinding higher here, again, it brings up all of the moving averages. And whenever we get all the moving averages stacked on top of each other, that usually means what? It usually means a new trading range is developing. Now, by now, you're probably looking forward to ranges by now, right? I used to be scared of ranges when I was a newer trader, but once you learn how they work, once you learn how rotation works, how bear traps work, how add-ons work, you'll be like me. You'll start hoping for a range day every day. I mean, we always like range days in our trade room. Now, remind me again, what do ranges do? In a bull market, they're going to want to rotate. Well, in any market, right? Bullish or bearish, but ranges. Once we find that trading range, then we look for rotation back and forth. And we use things like megaphones or expanding triangles. I teach that in more detail in that free video class. Pendulum swings off the low, off the high. Okay, so that's the basic idea. And of course, because we are a bullish market overall, there's more likelihood now for a rotation, like on the S&P, that goes below it, goes above it, and breaks out. And when it breaks out, what do? They almost always come back for a breakout pullback, right? Like we talked about last night in the video, right? We talked about last night how that big move down last Friday morning went all the way back to a breakout pullback zone, right? So breakout pullbacks are very, very common. So, okay, so knowing that basic fundamental way that ranges work, the goal is very simple. Take this range below us, ideally underneath a prior swing, but really that range below us now acts as a breakout pullback zone. I'm going to use that 21 EMA, and we're going to use that same bear trap add-on technique that works so well every morning in our trade room, right? So bear trap coming in, 1 try, 2 try. Now, why 2 tries? Because I want their stops, right? I want their stops. If I get 2 tries here, now I know where sellers are in pain. Now I know where sellers become buyers, right? It's very important to think about that, right? If you sell here and you get stopped out here, you buy your way out. That's why traps work so well. And if you understand this in context of a range, if you apply this bear trap pattern in a range environment, and we know already it wants to rotate higher, these bear traps can be very, very effective, right? They run down, bears once, bears twice, and they rotate going higher there. Okay, so on this one though, remember, the reason why ranges are oftentimes more profitable is because unlike a trending market where we're just trying to go back and retest the high, you know what I mean? In a trend, we go up, we pull back and retest the high. In a range, we don't do that, right? We rotate the amount below, the amount above, and we're going in to add to our winner. Again, just what we always do, right? Nothing new there. Bear trap, add on, and that range rotation going higher there. That's an easy trade for us tomorrow after it's grinding higher. But be aware though. Every once in a while, we get the opposite of that, right? Every once in a while, we get something like this, right? Where it goes up into a range, it goes higher first and then back lower, all right? This one, I'm going to warn you right now, this will fool a lot of people, all right? It will fool a lot of people. It fooled me for a long, long time too, because it feels so bearish, right? Okay, so think about this one now. It's a bull range again. Again, think about the bull range for tomorrow. Bull range, now we go up. Maybe we take out that pendulum swing up there. All the rookies chase after it. Right now, again, if it really rips and breaks out, then we look for that breakout pullback, right? That's pretty simple, right? But most of the time, though, when we're already this high already, we're already way high up already, most of the time, this is a bear trap up here, or sorry, a bull trap up here. It'll rotate back down again. Now, like I said earlier, this will fool a lot of people because they're going to use the tick charts for direction, right? But again, the tick charts are not for direction. This is a range rotation. And so I swear you can almost hear the pain of the rookie traders who get caught on this trade going short here, right? Bears come in, they think it, because then it feels very bearish, right? It rotates off that high. And oftentimes when it rotates down, you know this, right? When it rotates, it oftentimes rotates really strong. And so it can be very difficult on the emotions, but this is why we put a game. This is why we plan our trades. We plan our trades the night before, at least I do, because now I know what I'm looking for. And I may not know exactly what we'll get tomorrow, but I know it'll fit inside of one of these strategies we talk about here tonight, bear trap, and again, the add-on as we run going back higher again. Just keep trading that rotation. Same thing over and over again. And remember, the same basic idea we had earlier mentioned earlier on the S&P, if we were to, for example, go into a range up here and we saw just a huge move back down again, right? That strength of that move, again, it will feel very bearish, but on a tick chart, it's just a big pullback. It's a reversal on a tick chart. On these ones, remember, right? We still look for that same bears once, bears twice, but remember this. When it really makes a strong run going down like that, bigger than that one today, right? It'll be a really strong run down around the PPI report, I would assume tomorrow, or something else comes out, right? Spooks the market, makes a big run down. Again, on these ones, we know that the strength of that move lower is going to want to retest that low. So I take these types of trades here. I'm always very quick to take that 1-to-1 first target, get rid of all that risk. Hopefully, it's all for nothing. It keeps on rolling. We get some nice big paychecks back to retest the high. But again, in these big, strong moves down like this, I do try to take that target early, a quick first target, get rid of that risk. And then if we do roll over and make that run back down again, it's that low, it's that pendulum, it's that swing low, it's any of this area. What do you think? Is that a good place to sell? Right? We're bullish overall. We're at support below a range. Ranges love to rotate. What do you think, right? Yeah, no, right? That is the worst possible place to be selling, which means it's a beautiful place for, you guessed it, a bear trap. These retest trades, again, they are kind of a gift from the trading gods, right? Bears once, bears twice. And again, I'm just simply scribbling on the screen right now, but a lot of great examples of this, real charts, real setups, right, from our trade room included in the free video classes, right? So again, it's the same bear trap, add on, and rip that sucker going higher. Or again, if it runs up, and we get that V bottom down there. V bottoms are tough, I will admit, right? V bottoms are not ideal. They're going to V bottom. They're going to pop, start grinding higher. The key is, again, just find that trend line off the highs, bring it down off that low, and whatever you do, don't miss. The first test is the best test entry. And you can use any entry tactic that you know already. I like to use traps. I like to use failure patterns like I teach in the free video course. Very simple entry techniques. They work pretty well going higher from there. All right, guys. So second strategy for tomorrow is a range for tomorrow. We got PPI tomorrow. We got CPI Thursday. So it wouldn't totally surprise me if we see another day here where we see a choppy range overnight, break below it, bear trap, and ride that rotation. We've seen a lot of those so far the last couple of weeks here. Right, guys? That's the game plan for tomorrow. Now, speaking of tomorrow, guys, the place to be is in our trade room. Guys, the easiest way to start making money in these markets, come out, learn and trade along every morning at the opening bell. As always, I'll put all the important links you need to learn the strategy, get your confidence back with your entries, get your P&L back in the game again. Grab the free course. You'll love it. Then come join me in the trade room, and we'll do it together every morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.